Hey everyone, welcome back to Paid in Theta. And this week we had one cash card put expire worthless Snapchat. I think I'll keep doing the same one. Snapchat's been very positive after its pretty bad earnings. I think it's at a very good price right now, so I think I'm gonna keep continuing Snapchat cash card put. Uber still deeper in the money. I'm gonna be assigned these shares at $31. It's at $30.25 now, so I lost $125 right now. Has earnings next week. Good news on most tech companies, I would say, although Uber is a rideshare company, so it'll be questionable. I think it's at a good price right now. I'm fine owning it at $31. I've made some premium, in the range of a $50, nothing crazy. So, maybe I'm only down $75. A big earnings week is coming this week, and I'm gonna get some premium out of it. The IV is crazy. Expected moves pretty high. I'm gonna charge over my 31.50, my entry point, and I'm going to probably get around the 33 mark as long as I can get about 1% this week and a chance to make a couple $100 off this. That'd be great. So that's my goal with this Uber. My Bank of America, it did not go above my 25.50, so I've got this contract back. I'm gonna sell it for probably a month's time, and I would like to get about $26. We'll see. Still got another week on this. I'll just keep rotating these Bank of Americas. I really don't mind owning Bank of America, honestly. It's not a bad company at a very great price, and I'm making monthly payments or monthly dividends from these option contracts, so it's really not too bad. However, my Iron Condor, it has ended pretty poorly due to my latest trade, Apple. I didn't realize it was earnings week. What a rookie mistake. Earnings, it blew up 10%. And of course, I stay away from earnings with my cash cure puts because I know it's going to move a lot. It overreacts either negatively or positively. Doesn't really matter. The stock's not like Apple's making 10% more than it used to. It's just investor hype. However, it messes you up with iron condors. And of course, I had a $250 difference because that's how the contracts are. But with Apple, giving investors that have one share of Apple 4 shares of Apple and cutting its cost by a quarter per share, I would think it would even out to $1 a share now. So maybe I'll get back in it. But either way, that's besides the point. It's a $250 loss I took on this because, obviously it's above my call. It's like at 420 and my call is 395, of course. Didn't expect it to move that much, but then again, if I would have known those earnings, I would have expected it. Anyways, loss on that. So I made about $124 and I lost 254. So I've lost $125. It is what it is. Next week, I'm going to go at these iron condors a little bit smarter in terms of picking more. I like the ETFs because there's not as much chance with earnings and stuff. It evens out a lot better. And yeah, earnings really got me. So I'm a little upset with myself that I let this happen. But it is what it is. Learn from it, move on, and I'll continue to keep selling iron condors because these two expired worthless and I got about $50 out of it. So that's really good. However, it's not good that I lost $125 on Apple. So I brought in some more money to play with. So I think I'm going to continue to sell cash cure puts. And honestly, I might even go 2 contracts for Snapchat. Let's just kind of see what we're going to do. So Snapchat, this is the next week's. Of course, the price is going to be a little bit different. It's going to be a little bit bigger due to having like the weekend. However, you can see if you're going to sell cash cured puts, you can make about 1% around there. Like I said, it's going to be a little bit higher. So maybe, a whole dollar off because it's at $22.50, just say $21.50, you can make $34. That's some pretty good percentage right there for not being the riskiest trades. And I would love to own more Snapchat at $21.50. So I think this is a pretty good decision. I might even have another, maybe like 2 contracts on Snapchat instead of 1 because I brought some more money into the picture. So gonna go at Snapchat. My Uber I'm gonna keep, and I'm gonna flip the covered call side, and I'm going to hope that it has good earnings and I make a couple $100 off the stock sell itself. So let's go back to I paid in Theta. This one expired red. I own it at 31. This one is green. I won that one. I think I've won every Snapchat and AMD I've sold. So, I mean, if it's not broke, don't fix it. It's at a good price. I want to own it. AMD's a little pricey right now. I'm going to own Uber at a cost basis of $31.50 for the 100. And that's the wrong. And I'm going to try to sell this one at like 33. That's my goal. So let's just go August 7th, 33, 33.50. A couple $100 would be amazing. Alone with 1%. That's the goal. We'll see. And a rough estimate of what I'd like to get out of Uber. Let's just do that now since we're already here. Uber, the 33.50. It's a pretty wide gap, but I might even go to 33. I probably will go to 33 just because, so I can get the 1%, because the 1% a week is very, very nice. So let's go 33. If I lose $50, I lose $50, but I got to stick with my goals. I would say, 35, that might be a little ambitious, but $35, I probably will buy, honestly, more Snapchat with these Theta reinvestments, just because Snapchat, I think, is at a very good price. But I've also been adding FDIS, which is this one right here, Fidelity Consumer Cyclable, whatever, ETF. Basically, it owns, I think, 34% Amazon. And honestly, let's just pull it up, because this to me is one of the new ETFs that I think I'm going to invest a lot of money into, because it's pretty aggressive and I want to get more growth. Let's see here. So the top holdings, so about six, more than half of the whole entire ETF are these stocks right here. And I believe these stocks will do pretty good, both right now and 20, 30, 50 years from now. Amazon, I want to own more Amazon, but I don't have $3,000 to buy one share of it. So if I own this ETF, the ETF, a third of it will go up due to Amazon. So I kind of went at this ETF because I want to own pretty much only Amazon. And like I said, because Amazon's high price, there's not too many ETFs that own a third of their holdings in one company, especially the company I want. So that's why I'm going at FDIS. Amazon, Home Depot, Tesla. I mean, Tesla's crazy. Wouldn't want to own it personally, but in an ETF where it only has 5% weight, I think that's a really good thing. Home Depot, I'm sure they're killing it right now with all this quarantining and people being stuck at homes and need a, upgrade. McDonald's, honestly, just a staple. Can't really go wrong with that. Gives this ETF a little bit more of a dividend. Lowe's, kind of same thing. Nike, apparel, whatever. Starbucks, people are still going to be buying coffee. I think these companies will do good over the long term, and it's already made me a decent return just for a few weeks. 2%, pretty modest, but I think I'm going to keep putting more money into FDIS and this SPYG. It's just like a ETF spider that tracks the S&P 500, made 2% on that as well. So I might stick away from like AT&T, Bank of America, even though they're really good companies at really good prices. I think I'm going to go more towards the ETF side. I mean, as you can see here, it could be boom or it could be bust. ETFs is more in the middle. I think I'm a little heavy in the boom or bust type stocks in my Theta reinvestments. So I'm going to go more ETF route just to kind of get the stability. Then once I build that, solid foundation of stability, I might go into more of these companies. Hopefully when AMD drops below $77. It's pretty pricey, but yeah, they are a very good company. So we will see. Like I said, next week I'm going at ETFs to Iron Condor, and it doesn't matter about ETFs because the earnings doesn't play. But if I'm going into to single company stocks, I cannot make this mistake. $250 is brutal. I could have been up $50, no questions asked. And of course, I just made a very, very rookie mistake in this Apple. So it sucks. It is what it is. I'm going to be doing iron condors next week. I'm going to be selling some cash good puts as well as a couple covered calls, Bank of America, Uber. And yeah, so watch next week and you'll see the positions I take and basically the recap of how I did on Friday or Saturday or whatever on the weekend. So thanks for watching. See you next time.